Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Over the last 3 days, the Australian dollar has remained in a somewhat bullish pattern as the three candles now push towards that objective seen at 71.70. Not quite broken that level. However, in light of the pattern, with the MACD also just confirming the positive signals, it breaks the zero axis, may see a little bit more of a stretch, and that is towards 72 figure 15 area. The reason behind this is that we've seen little pullbacks and all the closes to these candles have been relatively firm. So this is why I feel we could see a little bit more of a squeeze, and then with the broader picture looking back towards the bottom side of the range around 69 cents. The dollar index, which measures the greenback strength against a basket of 6 major currencies, slipped in the last 24 hours and is now attempting to recover the recent losses as it attempts to reclaim the 96 handle. This has also put the euro in a sort of a slightly positive stance here after the recent slip in the US dollar. However, as we get closer towards that top side of the range, anywhere from 113.5 to 114 again may see a rejection. The indicator is not relatively strong from the RSI, but the MACD is holding a slightly firmer signal. Overall, though, I feel the bears will take the opportunity and ambush the market for any further gains as we wait for the CPI number that's out tomorrow. The bullish case is still contained by the 114 handle or cap, that is, which we can see here for dollar yen. The market is still somewhat tempting to restage further gains, but I feel with the lackluster price action from the recent previous day and today may actually see the market turn away from this top side and look back towards the bottom side of 112.65. Sterling, however, took the challenge to the downside, hit the target of 130.150 and then rejects it and now hovering around the 132 handle. We've got a very overheated ADX, bullish divergence from the RSI. I feel the market has just tested that downside, found support, and now looks for a further rebound, and that is towards 133 and reassess. CAD Yen took a challenge to the top side and thought twice about it after posting a long-legged doji. I still feel the market is lacking momentum and therefore could soon see the market turn away from this trend line that hovers around 90.20 to around 90.70 as a cap and look back towards 87.20 as a target. Gold is still remaining somewhat lackluster, but therefore we are looking at the RSI that could support a squeeze. However, I feel the market will take the opportunity to see this as a bearish one and see the rejection from the 1,800 handle and look back towards the bottom side of the range of 1,757. Wrapping up with oil, the market is near enough reached its target after the posted hammer back here a few days ago. The market topside call was at 73.50.60 or around there, and we're getting very close to it. We're only about 50 points away. Reassess from that level, we could see a rejection. However, I'm not overly confident to support a bearish case at the moment due to the recent strong hammer that could easily see the stretch beyond 73.5, maybe even up towards $77 a barrel, as the MACD is just confirming positive signal. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.